Welcome back, everyone. Let's turn our attention to the charts and discuss the recent market volatility.
Today I want us to dive into what I feel is the most important thing to understand as a beginner investor or trader stepping into any market. Whether it's the regular old stock market, forex, or crypto, learning this math and using it will better help you protect your account and your mental sanity. A statistic that always gets thrown out there is how 90% of traders fail. Most can't even make it past the first 3 months. What's curious about this is that it mistakenly, in my opinion, assumes that these novice retail rodents had any clue as to what the hell they were doing to begin with. These retail rodents jump straight into the deep end of trading without even learning to splash their little paws, let alone swim. We'll be reviewing some recent trades surrounding Beyond Meat, which recently was short squeezed, along with my own experience in riding one of these meme short squeeze stocks in the form of Gamestop last year. A break in tone. For me, this has been an extremely difficult month for my trading style. Mostly due to Thanos causing these violent sell-offs with a single tweet from his phone. But with that being said, it's extremely vital for your account's future that you understand the risk you're taking when putting anything into your account. Remember that today is just one of many. If you go full tilt and begin revenge trading or forcing trades, you risk getting liquefied due to a single tweet. Seeing some of these devastating corrections on certain stocks and cryptos, I mentioned to the wife that suicides would be up after seeing some of the red bars that had been formed. Suicide is never the answer, and you should always seek help if those invasive thoughts set in. If you feel you have nothing, consider adopting a loyal, loving pet. They'll pour their love into you tenfold. So I'm going to share my experience with the meme stock Gamestop. First, as a showcase for what I mean by position sizing. Back in May of 24, there was a short squeeze that occurred, and it wasn't the headlines that brought me to this stock. If I had waited until those, I'd be a little bit late to the party. Running through my scans, I saw this beautiful looking bull flag on the daily candles. So the play was fairly simple to size, buy the breakout, put a stop just under the little support that had built up over the past couple days. I was willing to lose roughly $1,000 on the trade. When it started to move in my favor, that's when I decided to increase my position size up to about $2,000 of a loss. I wasn't ready to handle the extreme gap up in the pre-market, and in reviewing the trade, that's where I should have been easing out of the position. I know that once the market opened, it was getting halted every couple of minutes, and it got extremely messy getting out of that position. It was an incredible gain for one trade, but even with my solid position sizing, the move was so huge that it did mess with me psychologically. Ever since then, I adopted the rule that if it's good enough to screenshot, then it's good enough to start selling it. So now I want to take a look at Beyond Meat as an investment and as a trading stock.
Beyond Meat is not an investment-worthy stock in any way. Have you learned nothing from my lessons? Veggie burgers are not unique. They existed when dinosaurs were still grilling ferns. Their revenues be melting faster than vegan cheese for 5 years straight. They have less cash on hand than ever before, and their total debt is the only thing going up.
But Professor Patsy, didn't you hear they'll be in Walmart soon?
Oh, fabulous! So now, instead of not selling in grocery stores, they can also not sell in Walmart. A true masterclass in diversification. Next, maybe they will expand their losses to every gas station freezer in America. If I ever catch you buying that stock, I will revoke your trading privileges and your lunch break.
Fried chicken from KFC. Going in.
Oh, little one, you're gonna break your jaw eating one of those.
This is a problem. I can't bite into it. Doesn't help that I have some temporary crowns in my mouth, but you can see, in terms of the consistency of this,
Oh,
going with the
do they look edible to you at all?
texture. Take a bite here.
Such a brat, retail rodent.
Same problem. Inedible. Totally inedible.
So then looking at Beyond Meat on the weekly time frame, we can see this area that it broke down from, which took about a year and a half of this $6 to $10 range, where it just kept ping-ponging in there until ultimately it gave up, leading into 2025. So it makes sense that when it was short squeezed, it got right into that range before selling off extremely violently. So then it begs the question on the traders who are entering now when it was touching $7. What were you thinking? And let's look into some of these position sizes. Pulled up, I've got the position sizing calculator, and I'll publish it inside the description so that if you don't have one for yourself, you can use it, but you can also Google some online. They work just as well. So you start always by the entry price on when you're going to enter a stock. And the next thing you need to find is where would you exit the stock? Whereas like at this point, the trade isn't working out and I'm willing to give up. And as we'll see with a lot of the examples, some of these position sizes are just crazy to the extent that I don't think they even considered what their stop should be. So our first example, he's bought 10,000 shares at $7.50. So if we're entering at $7.50, right up here, we would then need to look for an area that, hey, it shouldn't go below this price. And as we look to the left, all we've kind of got is this region right here, where it's consolidated for a bit, and then a little bit lower over here. So we can say price shouldn't get below here. Maybe you could argue one down here, and potentially one here. So those are our three areas that we could say, hey, this is what we're going to stop size for. And then it's just how much are you willing to risk on if you're being correct or not. So in this example, we'll just say, hey, we're willing to risk $500 that this is somehow going to go to $100 in the next week or so. Let's say it doesn't reach back down to $271. Well, then it would tell us that we need to buy 100 shares. If we're willing to increase the risk a bit, say like 20%, well, then we add an additional 20 shares. And that's how we know, hey, if it does hit that price down here, well, then we lose $600 in this case. With his position size, he's put 10,000 in at $7.50, and the current price, if he's still in this position, is sitting at $147. So that would mean he's down about 80% of what he put into that position for a $60,000 loss. Now, if that's manageable for him, that's an acceptable loss for him where he's psychologically able to handle that, well, then that's on him. But for me, that's a bit too much risk for one trade. This next one is also a real rags to riches, right back to rags. His initial position size was 30,000. I'm going to assume all in. And he actually went up to almost 120,000. And being up 340% still wasn't good enough for him to sell any of it. Which then begs the question, was there any point that he actually would have sold this thing? And of course, like all rockets that go vertical, it came back down, and he's now down 76% on his position size for his entire account off of this one trade. This next one, we're looking at 14,000 shares at an average price of $6.75. Once again, with all these cases, nobody mentions like, hey, this is where my stop was. It's just, hey, I heard this stock is up some 2,000% nearly. I'm getting in. This next one is a classic. It's one of those, he saw somebody making a whole bunch of percentage online, and he's like, hey, I can make a quick 30 to 40%. But when you think like that, if you're trying to make a quick 30%, you also have to be willing to lose it, which he promptly did. This last example is also pretty tough, because it's an after the spike buy. So they got in at 250, but the position size is so ridiculously huge that if they're currently in this position to this day right now, they're looking at about a $217,000 loss because of how aggressively they position sized. If you really believe another short squeeze is on the way, just set an alarm around 250 and then circle back around to the stock when it hits that, or it might never hit it. Feel free to download the position sizing calculator in the description if you want Patsy's judgmental eyes looking at you as you position size your trades. Leave a like, subscribe if you enjoy this content, and in the meantime, here's some retail rodents in real life getting trapped.
Oh yeah, that looks like a good deal. Oh yeah. Oh, I think I'm gonna buy right now. Oh no. Oh no. I'm down 70%, guys. What do I do? Oh yeah, I heard there's 100% profit to be had. Oh yeah. Oh. It says minus 100%. What does that mean?
I think this is the best time right now. I think it's everybody's saying that it's going to $100. See, Monica, that's why I'll never trust you ever again. Like you stole my cheese. You also stole me this. Minus 25%, Monica. I was about to make a living out of this. What do we do here? What happened to me? I don't know.
Oh hey guys, I'm gonna buy in at 650. That's a good price, right? That's the dip. It can't dip anymore. Oh. Do I just hold this now for the rest of my life? It can only go to 100 from here, guys. It's time to get in here.
Martha, are you okay? Do you think it's the best time now? Yes, it's the best. It's at $7. It's at nah. I refuse. It's not gonna happen. I'm not. Oh, damn it.
Okay, guys, I got a plan.
What's the plan?
The plan is we're gonna fill this up with rats and then they'll bail us out of here. But it's a good investment, I promise.
Hey, Gene, is it good? Gene? I think it looks very solid. Is it $5? Should I buy now? Oh yes, I'm buying now. That looks wonderful. I need a break from this retail rodents.